Assalamu alaikum. Good morning, everybody. Dear distinguished guests, excellencies, ladies and gentlemen. Welcome to our event on transformation, FinTech and Islamic finance. Please, moderator Dr. Zamir Iqbal and our distinguished guest speakers, let's start for the event. Thank you very much.
Bismillah ar-Rahman ar-Rahim. A very warm and good morning to everyone. Sorry for a bit delay because I think people were still finishing up their breakfast, so we don't want to interrupt that much. But thank you so much. It's indeed my pleasure to welcome a very distinguished set of panel with me. Just a very quick introduction from my far right. Dr. Mahmoud Mahiuddin, who is the Senior Vice President at the World Bank. He's also a special envoy on SDGs of the World Bank. Next to him is Dr. Riaz Shabzir. He is the Deputy Director at the IMF and involved with the FinTech quite heavily, as well as in Islamic finance. Next to him is Dr. Muhammad Khamour. He is the chairman of Guidance Financials, and he has been one of the pioneers in Islamic finance in many different countries. And he's also representing our local partner, Bank Al Yusr, which we are very thankful to Bank Al Yusr for being our local partner. And next to my immediate right is Mr. Hazim bin Gajim. He is a CEO of InvestCorp, and IDB has quite a long relationship because with InvestCorp, InvestCorp has been one of the leading financial institution in the region and have with a very good track record. So with that, I would start without further delay. And I think there's so many things to discuss because fintech is relatively a new emerging frontier, and from that perspective, one can think that there are many opportunities, especially not only for conventional finance, but for Islamic finance as well. Now, so what we thought we would request our panelists to talk about how fintech can be used first for Islamic finance, and within Islamic finance, how we could do to promote the achievement of the Sustainable Development Goal. So I think let me just start with Dr. Mahmoud Mahiuddin. I think maybe without getting into the Islamic finance, since you have been the key spokesperson on the behalf of the World Bank on SDGs and been taking the mission for many years, how do you see this new technologies emerging? How do you link them with the whole SDG objectives? And what do you think, what is the potential for these technologies? Thank you.
Right. Assalamu alaikum wa rahmatullah. Bismillah ar-Rahman ar-Rahim. Many thanks for the kind invitation and to discuss this very relevant and timely topic. And I recall that 2 years before launching the Sustainable Development Goals in 2015, the heads of the MDBs and the head of IMF sent a signed letter, a co-signed letter, to the Secretary General of the UN. The process didn't end yet. That was the process leading to the launching of the SDGs. But at the time, there was the high-level panel of eminent persons putting the directions and priorities, and it seemed then that we were on track to have something new to replace the old MDGs. So at the time, they said, well, we wish you all the best in the process as UN development community, and we are going to be supportive in 3 areas of work: data, finance, and implementation of the new goals. Then the story continued by having the the Sustainable Development Goals launched in September 2015, the 17 general goals, 169 targets with them. And before that, by a couple of months, we had the Addis Agenda, the Finance for Development Agenda, in which there was some reference to what's so-called the STI, Science, Technology, and Innovation. So I'd like to get all of that after almost 4 years of launching the SDGs, having the Finance for Development Agenda, and all of the current talk about disruptive technology and FinTech included. So we see that the technology is transforming the way that we are approaching the SDGs. Rather than data, I would assume that the heads of the MDBs and the IMF will not stop just at data, but they will mention something about big data and its implications on how to monitor progress, how to guide the policymakers, how to be better in targeting the SDGs. And on finance, of course, they would be talking a lot about the implications of technology on the financial industry, including FinTech. They would refer, in retrospect, to what is known now by the Bali FinTech Agenda, which was launched during the annual meetings of the IMF and the World Bank in Bali in October. Basically 12 principles. If you read them, they are a kind of a common sense approach on how to handle the advances in technology and innovation and their implications on the financial industry. From what we call the infrastructure of technology, which is based on 3 things, with an acronym of DNA, data, networks, and artificial intelligence. This is the DNA. So they would say something about how a country should establish its own infrastructure for enhancing the data frameworks and the technology supporting data at large. How can a country enhance its networks and platforms, and how can a country deal with all of that kind of new advances through better use of applications and programs of artificial intelligence. Easier said than done, because we know that it even goes into more basic matters when we deal with these issues. Many of the member states of the OIC or the Islamic Development Bank do not have adequate policies for data and information, including something similar to what the Europeans have now for the general regulations for the protection of data, including the privacy and enhancing innovation as well. So it's a completely new, different world if we compare what we are up to now in 2019 compared to 2015. So I said at the beginning, data is changing, finance, including financial aspects related to development, including in inclusion, matters related to technologies in transfers and lowering the transaction costs, how the traditional banking and capital markets are being disrupted by the newcomers into the system. I just 2 days ago, I wrote an article in Al-Sharq Al-Awsat newspaper in Arabic that could be translated as FinTech requires RegTech, so that we don't need just to stop at financial technology and its implications, but the regulatory frameworks need to be enhanced. It needs really to have the tools and means and the capacity to monitor the new industry, to support it, and at the same time to protect the rights of the different market participants. Are our central banks, are our financial supervisory authorities equipped today with the resources, including the human resources and the technology, to enable them to monitor these new developments for the benefit not just of the financial sector, Zamir have been working in many aspects in financial development based on Islamic finance. He reminded me of the first meeting that we had back like 15 years ago or more, that we're talking about financial development for growth, how to link the financial sector with the real economy. So with this spirit, I would say really that there are many advances based on the technology and the advances in technology that they are going to be and are today transforming the financial sector faster than what we thought. But still, the links of all of these changes and their dynamics to economic development and social development, and including, of course, the SDGs, are yet to be seen. Some aspects could be benefiting better from lower transaction costs, from better financial inclusion, perhaps through better information to enhance stability, and other aspects could be very much disruptive. And back on this point, and I may come back to a couple of issues related to the SDGs and how they benefit from these advances. Just to get it from this kind of general abstract approach into some specific announcement that was made by one of the big tech companies, which is Apple, in coordination with MasterCard and Goldman Sachs. They developed a new credit card, not like the card that I bet everyone, if I ask you now, you would have one kind of these debit or credit cards in your pockets. That new card would not really be with a signature. It will not really have a number. It will not have a time limit. It will not have an expiry date. It will not have a minimum fee. It will not have a late payment fee. This is what they are saying. It will not have a transaction cost if it is issued in Cairo or in Washington and you are using it in Marrakech. It will not have a foreign exchange transaction cost, completely different from what you have. So at the first sight, you say, well, this is a kind of a fantastic development. But if you take this kind of financial innovation that has three players in different industries, three areas of work need really to be considered. You as a consumer, you would say and challenge yourself and your credit card issuer, do you have a better deal? Why don't you move to the other card? But at the same time, will the new card issuer honor their promises in the long term? Who's going to be providing the consumer protection in this case? How can they monitor that? Does your central bank or financial authority have the kind of good oversight and supervisory capacity using new technologies in order to monitor this newcomer that was going to be having a physical version and a virtual version that you can use on the internet? The second one, all of those who are in the market today, if they are concerned about competition, they have to be alerted to this kind of contestability that is coming from three big players, that they are enjoying already a good market base with enhanced databases and big information, including the behavior of the consumer, that gives them an advantage. Is there a fair playing field on that? And how can they invest more, perhaps in partnerships, in order to do something similar? And then third, and equally important, the position of the regulators, not just the financial sector regulator. Since we had the FinTech, it's not just the traditional financial sector regulators of the central banks or the financial services authorities or the capital market authorities. There is going to be a requirement to coordinate with the real market supervisory authorities, with competition authorities, with antitrust bodies, and henceforth. Is there today this kind of a platform of good coordination between the regulators as it is today, good for the market participants? So I see it that the market participants have been more flexible, lowering the barriers between them, unlike the case on the regulators who are basically protecting themselves sectorally through some sort of old regulatory functions behind walls of bureaucracy and traditional sectoral emphasis. So it's a completely new, different world that in the bank we call it this, under the major mega trends and under the disruptives. But disruption is not always bad. It has its positives if it works good for the consumers, for the investors, and for the real economy side. But we may just end with the disruption if the rest of the dynamics and the ecosystem of the economy and the society at large are not really working hard in order to internalize all of these new changes in their work. The Bali FinTech agenda that we did jointly with the IMF, excellent work on that, and I bet that my colleague from the IMF is going to be talking about that or react into that. But this is just a start, and this is not enough because the whole system requires not just the regulators, but the whole society and the whole economy to be very much involved in the new changes going forward. Thank you.
Thank you so much, Dr. Mahyuddin. Indeed, very fascinating, the developments taking place. Let me move to Dr. Ghias. Ghias, I think Mahmoud has set up a stage with the introduction of the Bali initiative. Maybe build on it and see that IDB member countries, the OIC member countries, which are usually bit behind the technology and many other aspects. How do you see that, how they should try to take a bit more proactive role and try to take benefit of these changing technologies?
Thank you, Zamir, and thanks for the IDB for organizing this event. So, for the OIC countries, almost nearly half of the OIC countries have account penetration of less than 50%, which is about the world average. So, and that's a major shortcomings in these countries. FinTech obviously will give an opportunity to increase financial penetration, particularly in the underserved, underbanked communities, and we've seen examples of that very clearly in Africa and Asia, where financial penetration improved significantly over a very short period of time. We're talking about a few years, less than 10 years. In some countries, the population's access to financial services, all financial services, including payment, less than 10 years ago was in some countries less than 10%. Now they reached almost 90%. These are major advances, particularly with major implications for the poor. As Dr. Muhyiddin said, the IMF and the World Bank issued the Bali FinTech agenda, and this was really in response to broad concern across the world. Many countries are quite keen on harvesting the FinTech benefit because it has major implications for growth, for poverty reduction, through deepening financial institutions, so for financial sector, strengthening financial inclusion, strengthening efficiency of the financial system. These are all important objectives, but they are also quite concerned about potential benefits. Some of them could be quite disruptive. So to help countries think through these issues, the Bali FinTech agenda, and I would encourage you to download the agenda. They are posted both on the IMF and the World Bank website, available for everybody. These 12 elements are a high-level consideration. It's a framework to think through these issues. And what we found since we issued it 6 months ago, that not only many countries start looking through these elements to map their engagement and their financial sector development, but even private sectors, including big techs, start looking into these elements to see where they fit within that framework. And these elements are broad, roughly in broad 4 areas. The first one is enabling environment, ensuring that there is an enabling environment, and it calls for embracing FinTech. Embracing FinTech meaning prepare for it, don't be scared of it, and explore the opportunities. It also calls for making sure that you are enabling the technologies by providing foundational infrastructure and providing broader access to the population. And this has to be public policy. It wasn't that much, let's say, 10 years ago. It calls also for ensuring that the open to free and contestable markets, because technology is evolving very rapidly, and we don't know which direction we will go. You may favor one particular technology and could be obsolete in a couple of years from now. Let the market decide on these issues. But also, it calls to fostering financial inclusions as a direct policy objective when a country put together a fintech agenda. The second area is on financial sector policy. Obviously, as Dr. Mahiddin mentioned, the public sector has to adjust its policies. And here we are looking at three areas. One is on monitoring. Right now, what we monitor is very traditional financial sector activities. That scope of monitoring would have to expand much, much broader than that. What's happening outside these perimeters, quite astonishing and have major implications down the road. This monitoring framework has to be broadened, but also there is a need to adapt the legal and regulatory framework. On the legal side, there are a lot of new new concepts that are not defined in the law, and authorities, and not only the authorities, but private sector as well, are struggling to see how they can manage and fit their project, their innovation within the existing legal and regulatory framework. But also, the document is calling to be mindful of the risks and the need for resilience in the market. The risks are quite obvious. The same instrument that provide benefit in terms of speed, efficiency for legitimate use can be readily and easily used for criminal misuse. So they need to be aware, they need to strengthen the AML CFT frameworks and financial integrity. At the same time, we need to ensure monetary and financial stability. Central banks are concerned. What does FinTech do to monetary policy? What does it do to the monetary transmission channels? The financial sector is transforming. What does it do? What does it mean for stability? All of these issues are on the top of mind of the authorities. But also at the same time, you have to make sure that you have, these are very good innovation, but also they are very susceptible to cyber episodes, cyber attacks. And while you are building that infrastructure, cybersecurity becomes more and more important. Data governance and data infrastructures, as Dr. Mahiddin said, this will become the issue going forward. Many countries, many scholars are saying that data is the new oil or the new gold. And the countries who have more data to offer, particularly for artificial intelligence, which requires a huge amount of data. The more countries, the more data available, the better the services offered by FinTech and so on. Finally, it calls for international collaboration, for collaboration in general. And this is critical because it would require particularly a very close collaboration within national jurisdiction, as many of these issues cut across multiple regulatory jurisdictions. It goes from financial sector to telecom to data and so on. And the advice was for many countries to establish a unified framework or a council to discuss these issues and coordinate. But also we are calling for increased collaboration internationally and regionally by sharing information. And we have been doing a number of outreach activities, including just 10 days ago here in Rabat, which included countries from the Middle East and Africa. These international collaboration are critical because one key risk that we see could potentially be coming up from FinTech is a race to the bottom, because countries can feel the competitive pressure to do something and advance at the same time. They open much bigger space for risk than necessary. And that will be a race to the bottom for the whole world, and that's not something that we want to see. That was nothing. Thank you.
Thank you. Yes. I think I hear a lot of promises of the new technology, but at the same time, a lot of challenges. So I think let's move to now the private sector and hear from someone with a lot of experience of Islamic finance and private sector. Dr. Hamour, how do you see that these new technologies like crowdfunding, peer-to-peer lending, and when you see what is the development in Islamic finance, what sort of opportunities do you see in this particular new developments?
Thank you, Dr. Iqbal, first for the invitation. Thanks to all the organizers for the invitations, and on behalf of Bank al-Yusr, which is one of the first participation banks in Morocco, I'd like to thank the audience for joining us. The economist in me thinks about the impact of fintech in terms of transaction costs. As you know, the financial structure in corporate finance, financial structure is determined by transaction costs, and transaction costs themselves are determined by informational constraints in the financial contract. So if, to the extent fintech changes or relaxes these informational constraints, it can have a huge impact on transaction costs and ultimately on financial structure. And as you know, Dr. Zamir, Islamic finance is ultimately about financial structure. So fintech is going at the heart of the challenge of Islamic finance by opening new opportunities in terms of transaction costs and what can be done to implement, to give reality to some of the principles driving Islamic finance. So I think this is at the heart of the question of the entire financial Islamic finance industry. Now, just to illustrate what I'm saying, yesterday I had the pleasure of discussing with one of the leading microfinance experts here in Morocco a challenge of financial structure in microfinance. And I'd like, as an illustration, to show you how this is driven ultimately by transaction costs. The question we were discussing is, how come microfinance institutions utilize credit to provide financing to small projects when credit shifts the risk of the project entirely to the party that is at the borderline of poverty and has no diversification possibilities, where the microfinance institution usually is highly diversified, deep-pocketed, and often has a social purpose as opposed to simply a commercial purpose. And the answer is transaction cost. Credit simply says you owe this much, irrespective of what happens to your project. If the financial institution were to go and get information about the project on a micro transaction, the cost of collecting or auditing the information would be more than the amount funded, and things become infeasible. So risk sharing, which would be a fairer, more balanced way of doing a micro partnership on the project, would be infeasible due to transaction costs. Now, somehow, if technology can be brought into the question, into the issue, and change these basic fundamental challenges, it could completely change the structure of how microfinance, for example, would be conducted. So when we look at Islamic finance and look at its history, the last 40 years, I would say the industry, the discipline of microfinance has primarily looked at trying to mirror, reproduce, offer something that tries to replicate the benefits, but also the products, the business models of the conventional financial industry, but in a Sharia-compliant manner that arguably may be sounder, may be fairer, but it's still something that mirrors the existing. Now, if you look at fintech, fintech could be used as incremental change to enhance this way of doing things. So fintech could be used, for example, to enhance the efficiency of consumer murabaha through a network of informational network that links the different players, or provide more efficient liquidity solutions to the banks and so on. I think that would be a limited use of fintech. I think the potential of fintech for the Islamic finance industry is to look at it as a leap, as a jump in technology, not as an incremental use of technology, as something that can allow the business models, the financial structure to change, and therefore, instead of replicating in a Sharia-compliant model the bank of yesterday, to try to innovate and create the financial institution of tomorrow, right? And I think that is a challenge that requires a different way of even organizing oneself. This is no longer a case of potentially simply putting together professionals from conventional financial industry and bringing them to apply their skills in the Islamic finance industry. It becomes a question of bringing innovators, bringing disruptors, if you will, bringing new ideas into the field that are not simply tested ideas elsewhere. And I think that potential is tremendous. It requires a different organization, and I can see already some of the institutions moving in this direction, and hopefully creating new models that can really open new horizons and express in a less constrained way. There will always be the constraints of existing tax and regulatory and legal and habits and what have you on doing something new, especially in the Islamic finance world. But I think the FinTech truly gives this industry the opportunity of expressing more the applicability of its principles into new models that don't exist today.
Well, very well said and very promising. So let's move on to another practitioner, one of the leading asset managers, InvestCorp. We are very lucky to have the CEO with us. So Hazem, could you please share with us, you have very good asset management, successful asset management, both in conventional side as well as Islamic finance. You are a leader in many markets. How do you see this potential of FinTech and Islamic finance?
Dr. Zamir, first, thank you for the invitation, and Bismillah ar-Rahman ar-Rahim, and to everyone. Let me just share at least my personal perspective. When I've been now doing investing for over 30 years, and for a very long time, my perspective on Islamic investing or Islamic finance was about, it's about being Sharia compliant, it's about the balance sheet, the capital structure, what sectors that you can and cannot invest in. That was my mental view on what Islamic investing was all about. And over the years, and quite frankly, Dr. Zamir, I'll give credit to all your colleagues at the IDB, when you talk to them, what do they talk about? Financial inclusion, fighting poverty, social development. These are, to me, are the pillars of what Islamic finance is about. It's not about what's in Sharia or not. It is about fundamentally changing people's lives to the better. Okay, and truly, I got to appreciate and understand those principles, and they do have not only a personal impact, but also, obviously, it gives purpose to a lot of what we do. So now let me move on to FinTech in general. In January 2007, you probably all remember it, something very, very important happened. Apple launched the first iPhone. Okay. What exactly is the iPhone? What is this? It's not a phone. This is my phone, but it's also my supermarket. It's my pharmacy. It's my library. It's my bank branch. This is my bank branch right here. I come from a small village in Tunisia where my parents' generation, if you went to the airport or you went to the bank branch, you would actually dress up. You would actually have to put something nice before you walk into the bank branch because you're walking into the bank. But we have come a long, long way. Today, each one of us have literally a bank branch in our pocket. Okay. This is something fundamental. Not fundamental from FinTech, from investing, from Apple, iPhones, and what have you. Fundamental in the basic principles of what Islamic financing is intended to do. Social inclusion. How can I get 6 rupees in the hands of a mother in a village who needs it to buy wheat to cook meal for their children? How can I get crowdfunding for a school that doesn't have a roof in remote villages? Get it happen. That is what technology brings today. Okay, and that is what FinTech in a large way will play an immense part in that. I agree with Dr. Haroon that the cost has always been prohibitive. However, today, when we have branches in our pockets, it's one very important step. I was in Indonesia 2 days ago, talking with some telecom operators. Guess what's the mobile phone penetration rate in Indonesia? It's close to 200%. What does that mean? On average, an Indonesian have 2 phones. Okay, and I suspect in most of the Islamic world, the penetration rate is comfortably in excess of 100%. Now, that means that the reach is there. And this is not the reach to in the capital cities, in the metropolitan cities, to the educated. The reach to every single member of society is there. What FinTech hopefully will allow is how to use technology, to use this window, which we all have in our pockets, in order to achieve what the fundamental principles of Islamic financing. Okay? Social inclusion, financial inclusion, social development, and fighting poverty. As an investor, we are fortunate. Why are we fortunate? We have a lens that looks on a global basis, anywhere from the US, Europe, Asia, Middle East. And I say unfortunately. Why do I say unfortunately? Today, approximately $50 billion a year is invested in the FinTech space. Out of that 50 billion, 40% is in the US, 40% pretty much is in China, and 20% is in the rest of the world. How much does the Islamic world account for that? Not even 1%. Okay, so are we behind? Fundamentally, we are behind into achieving the fundamental agendas and principles which our religion called for from the very beginning. So, but not to despair, we do not need to produce the iPhone. We just need to be able to afford to buy it, okay, and know how to use it. So, and it's okay. It's okay to leverage on the know-how that others have invested in it. One of the speakers talked about the regulatory environment. I do agree that is one of the biggest barriers out there. I'm a big believer in Moore's law, and I think the transaction cost will significantly come down on the back of a lot of the changes. Banks are terrific, and FinTech has not been with us only recently. I would say FinTech was with us since the 1870s. The very first electronic device for the ticker, the stock ticker device, which was invented in 1870. That is effectively a FinTech device, which allows in multiple locations at exactly the same time for individuals to know what is the stock price. And from there on and on, financial institutions globally have been the biggest and fastest first movers into mainframe computing and the digitization of their practices. So the banking industry, which is fundamentally you need it because that's how money moves around, has been an adopter of FinTech from a very, very early stage, and that has continued to evolve. Today, the combination of the availability of the end device, but also the availability of blockchain, which for the very first time allows the very transparent, easy, unmanipulated manner of having full clarity where the money goes. And that have been one of the biggest issues. Again, going back to my village when in Tunisia, when the government, after the independence in the 50s, wanted to kind of help promote villages, that kind of, they will, okay, here's an allocation to the mayor. Mr. Mayor, here's your budget, go and make your village better. And then Mr. Mayor will depend, kind of who's friend and who's da-da-da, and who speaks to his ear closest, and those in the remote areas, he doesn't even know of them and what have you. Fortunately, we have came a long, long way over the last 70 years. And today, with the use of those new technologies, with the use of the access which exists today, and the full accountability and transparency with the use of blockchain, I am very, very positive. This phenomena is not just in the Islamic world, it is a global phenomena, and it is starting. As an investor, startups are terrific. And I'm going to use one example, and I'll stop there. In In 2007, you probably all remember Nokia. You probably all had Nokia phones. I suspect none of you have a Nokia phone today. In 2007, Nokia bought this business called Navic. What did Navic do? Navic had 3 million sensors on roads in 13 cities, in about 13 countries, in about 26 major cities to track traffic. And the whole idea is then with your Nokia phone, you can then see traffic, see logistics because of this fantastic large infrastructure that Navic has. They paid $8 billion for it. During the same time, in 2007, there was a small startup called Wazi. Wazi only got 80 million of funding, so 1/10 of what Nokia paid for Navic. And Wazi was doing exactly the same thing, trying to kind of find, measure, communicate traffic. And so when you go in your car, you can put your Wazi app on and it tells you, okay, this road is congested, you can take this other road and what have you. But they didn't have a single sensor. So Nokia paid 8 billion for Navic because of their 3 billion sensor. What did Wazi have? They said, look, just connect for free to our network. So suddenly, every mobile user became a sensor. And in less than 5 years, Wazi had 10 million sensors, effectively 10 million users. Okay, and today, it's owned by Google and has hundreds and hundreds of sensors. Why do I use this example? The sheer power of technology, the sheer power of thinking outside the box is fundamentally what Islamic financing and what financial institutions in the Islamic world need to look at. Not look at our existing infrastructure should not be the hindrance, and encouraging creativity, encouraging thinking outside the box. And sometimes, you know what? Even myself in my 40s, I feel I'm a dinosaur age. And sometimes I feel I need some youngsters in their 20s in the office to tell me what I don't see. And I think that part of maybe thinking inclusion in the fabric of our financial institutions is a must if we are to have a better future.
Thank you so much, Hazem. If you're in 40s, you feel old, think about me. And thank you for telling us that our phone is our bank branch. I think I never did think of that angle. Maybe I don't use it as a bank branch. But that reminds me, we're very fortunate to have a CEO of one of the very successful Islamic commercial bank in Pakistan, Irfan Siddiqui. So I just want to hear from him that as a commercial bank in a very populated Muslim country, how do you see FinTech playing a role in your new model? Are you moving to a phone-based branch? Are you still having physical branches? What is your experience? I think we have a FinTech problem, technology problem.
Right. Bismillahirrahmanirrahim. I'm sure what Hazem said is correct, that the world is moving branch in the pocket. Mizan started commercial banking operation only 16 years ago in 2002 with a single branch, and today we have close to 750 branches. But what we've seen in a country like Pakistan, which is very populated, is that both things are going parallel, hand in hand. So our mobile banking is also growing very rapidly. In fact, we are the largest provider of debit card and the POS transactions in Pakistan. But at the same time, every single branch which we open find business there as well, mainly because it's really a cash economy. So I think both the things will go hand in hand, in especially I feel in Islamic countries. I feel if we overdo only, the branch in the sky kind of a thing, we may miss out a lot of opportunities which exist in the country. Your sounding board is your branches, close to people and all these things. So I think they're not exclusive to each other. They would probably go hand in hand and continue to grow. Thank you.
Thank you, Irfan. So unfortunately, we have a limited time, so I'm going to come back to our panelists very quickly before I come to get a question from audience. Coming back to Dr. Muhyiddin, you, World Bank, always leading development institution. what sort of advice you can give it to the IDB member countries, especially because they are OIC member countries, for all Muslim countries. What do you think that coming back, how we can link these three things in our member countries, mean FinTech, Islamic finance, and SDG? What any kind of words of wisdom for us to follow?
Right. I think we discussed so far the two aspects in one way or another related to data and finance and how they can benefit from the advances in technology. But when it comes to the implementation of the SDGs, there are lots of investments required. One of them is related to access. And in the past, when we talk about access to finance, to the banks, to the insurance or takaful business, or to other aspects, there were requirements for that. Now, when you are to realize the digital dividend, there should be other kind of pillars that you need to invest in. One of them is the identification for development, and the identification for people to have access to all of these services. All of what we talked about now, even if you have the phone, even if you have the access to the internet, if you don't really have the kind of identification that would be realized by the service providers, you will be prevented from this kind of realization of the potential of getting what you need of financial support or savings account or a good insurance or takaful policy or something like that. So we started a program called the Identification for Development, benefiting from many of the good experiments around the world, including good examples from the South, either in India or Sub-Saharan Africa, to make sure that all of the adults in societies have authenticated, verified identification that can protect the person's right and can protect as well the service providers. The other thing that we are trying to do is what we call the digitalization of the economy. It's not just digitalizing part of the economy and the rest of it is lagging behind, but basically I like the notion, not that of the Industrial Revolution 4.0, but more the Society 5.0. The Society 5.0 is a concept that was developed by the B20 or the business community around the G20, led by Keidanren, which is the business association of Japan, talking about how the society at large, not just the business sector or the government or the financial sector, to be equipped with the tools, learning, education, and access to information, and to be part of this platform in a kind of creating an interactive, involved, advanced society suitable for the kind of expectation that all of these kind of technologies are offering. That requires a great deal of investment in human capital, great deal of learning for life, matters related to investments in systems to support all of these changes. And part of that is what we do on the Digitalization for Africa program, or what we call the moonshots, celebrating 50 years of the landing on the moon. There were lots of ideas associated with how to make a policy focused to deliver these kind of transformation. The other thing is related to, we're not just dealing with evolution and developments without accidents. With these kind of technologies, there will be some shortcomings. There will be people taking advantage of lack of knowledge. While at the bank, we appreciate very much the blockchain technology, and we have a blockchain lab, and actually we issued the first ever bond from A to Z using blockchain technology. From the origination to the distribution to the allocation, everything is done with this new technology. But at the same time, we see that there are many gimmicks using blockchain. We see as well some claims, including some cryptos that are there that have seen great deal of volatility, abuse of knowledge, abuse even of energy and power. We saw China, Korea, and Kenya, for instance, putting regulations on the use of energy for those who have been investing the limited resource of energy in mining of these cryptos. So we see that the ultimate way of doing these things is not just to have heavy hand regulation and that's it. It's basically to enhance the knowledge and the information and giving the people the right to choose. And then if anything goes right, they can benefit from it. If anything goes wrong, it will be them themselves to blame themselves. But we need really to give everybody the access to the right and adequate information on these matters. And then finally, on the 17 goals, you can see that there could be some goals that could be benefiting faster than others when it comes to these advances in technologies. We can see urban development guided by investments in digitalization for connectivity, SDG 11. We can see the potential of SDG 8 using indicators for economic growth or lowering remittances, for instance. We have been working a lot with the G20 to lower the transaction costs of remittances to get them below 3%. But until this moment, there is still in the world, with all of these advances, they still pay more than 12 or even 15% in order to make a small transaction of $200. So the use of technologies could lower these transactions, but you need access, you need information, and you need to break many monopolies in many of the remittances corridors. It's not just allowing the technology, but to facilitate the kind of knowledge, information, and regulatory support for that. In areas related to land and land rights, one of the most complicated areas in every and each country of the members of the OIC is issues related to access to land. And when you have the access to land, you're right over the land and to protect it. And lots of dispute, lots of corruption is about that. Again, the use of technology in the registration at a very minimum cost could really be advancing a lot of rights associated with land. We go through the 169 indicators. I will not bore you with the kind of different technologies and how they can advance achieving those 169 sub-targets of the 17 goals, but there is a great deal of correlation and causality between the use of technology in the financial industry or otherwise in order to help us achieving these goals. But they require prerequisites. They will not come without adequate investments in infrastructure, including digital infrastructure, without adequate investment in human capital and health, and without adequate investment ensuring against possible shocks. If we don't do these kind of investments, unfortunately, many of our countries will miss the benefits and the fruits of the new industrial revolution as it happened with the first industrial revolution with steam engine, with the second one on electricity, and with the third one on the computerization. We don't need that. Perhaps we have an advantage of knowledge of what went wrong in the previous industrial revolutions, and we have perhaps as well the advantage of starting late, so we can really do a bit of leapfrogging. And the knowledge platforms are wide open, and we can really do more in order to get the benefits of that for achieving the Sustainable Development Goals.
Thank you so much. Indeed, very well said, especially given that Sustainable Development Goals, we have only 130 months left and a lot of work to be done. Coming back to Ghiath now, Ghiath, I know that a board paper was presented to IMF board on Islamic finance. Was FinTech part of it, or how does that impact the FinTech regulation and supervision in our member countries?
Yes, we did issue a policy paper, and this was the first policy paper that the IMF issued. That was in not long ago, in February 2017. At that time, not much fintech discussion. So you can see how fast these things are moving forward. Nonetheless, in the Bali FinTech Agenda paper, which is also a board paper, there was an explicit reference where it said that these elements applies equally to both conventional and Islamic financial instruments and products. So that is stated explicitly in the document. And this is very critical for the Islamic finance on a number of ways, because they are going to use the same infrastructure, they will face the same issue that conventional finance will face, and that the preparation need to be done to enable Islamic finance to benefit from this. And it's not clear also whether it is going to be the existing banks or a new startup will come in or new technology firms moving into the Islamic finance. All of these issues are faced by the conventional finance as well. And in many ways, fintech is quite adaptable to Islamic finance. Recent industry report notes that almost 2/3 of the startups are in equity crowdfunding and peer-to-peer lending, whereas in many other countries it's mostly in payment and other issues. So that reflects the nature of Islamic finance. And it could go both ways, actually. Islamic finance could inform some of the difficulties that regulators are facing in regulating some of the products that we have on the conventional spheres. Good example, there are many examples, but one good example is, we were discussing it yesterday with Zamir, is regulation of ICOs. What is ICO? ICO is basically somebody issuing, having joint company, and they have shares for their founders, these are the investors, and then they issue coins. These coins are nothing but a claim on a product or a claim on profit of that company. What does that remind you? I mean, you have two classes of investors, shareholders, and then you are investors in coin. That's very much the same structure that Islamic banks have with the unrestricted investment accounts. And many regulators are struggling. How do we regulate the ICOs? And in some cases, I did personally point to them and said, look at how the regulators are regulating Islamic banks that could benefit from that. So it could go definitely both ways. Not only this, but I think the space should be opened up for entrepreneurs, for startups, and that is very critical, particularly for Islamic finance, because banks by nature are conservative. And because certain circumstances, a lot of the Islamic banks have focused on short-term funding, on trade funding, rather than the longer-term funding, the broader equity funding. These are areas are quite suitable for the entrepreneurs, and not only Islamic finance, but also in conventional finance, but it's more so in this case in Islamic finance. And this is a trend should be encouraged. What would require is for the authorities as well, when they go through the element and they try to map their priorities within these elements, if Islamic finance is their priority, if Islamic finance is a strategic priority, they have to find a space for it among these elements to see how that can be done. And in many countries, these priorities within these elements could be different for conventional finance versus Islamic finance. So it's critical for the authority to be aware if Islamic finance is a strategic objective, where in these elements they need to address in order to promote the Islamic finance.
Thank you, Ghias. Let's come to Dr. Hamour. I'm going to challenge the economist in you again, okay? You talked about blockchain, you talked about, many other tools, but we haven't talked much about smart contracts, because I think the smart contracts are more Sharia compliant than anything else and takes care of many issues of standardization and all these things. So what do you see the potential of smart contracts? That's my just as an economist in you question. And it's another question I want to ask you as a practitioner, that given the emerging country like Morocco, which is trying to set up a participation banking from the beginning, how do you see how they can benefit from a leapfrog using fintech technology?
Thank you, Dr. Zamir. I think there are a lot of ideas of applicability of smart contracts, as you said, or blockchain, or mobile banking, and so on, that we can think of the plethora of ideas that float around today is mind-boggling. It's truly a case of letting the market determine the outcome here. I think any effort to regulate or predict, you gave the example of information on traffic and so on. Now, I think that there are exciting ideas, and we can mention them. I think you can construct a P2P bank and remove the intermediation from it, and you can build it on a Sharia compliant or Islamic basis in a very attractive way. Is that a model that will emerge? I don't know. You can introduce not cryptocurrencies, but maybe you introduce a gold dinar based on tokenization, which could be a very interesting currency because it's not subject to inflation. It doesn't necessarily give a power to one issuer of currency versus others and so on. Would that emerge? We don't know. So I think it's an exciting domain, an exciting world, but I think we'll let the creativity of the private sector determine what comes out. But I think, and that links me to the second question, is that I think if we look at the Islamic finance industry, it has reached a kind of plateau in terms of creativity. I think the expansion is essentially to take what's happened in some countries and maybe move them to countries that have not yet fully developed Islamic finance industry. That would be the case of Morocco. Morocco is a latecomer in terms of legislation, regulation of Islamic finance. Other parts of Africa, in West Africa, are also latecomers. And one can take the approach that let's just learn from the experience and business models and products and so on elsewhere and implement that here. And that is definitely a component that is worthwhile and that's being done, and being done in a very sound and progressive manner. But I think the opportunity is, you mentioned leapfrogging, is the idea that one may, without a legacy, one has potentially more of a horizon ahead of oneself. I mean, in fintech, the most obvious example of leapfrogging today is mobile payments. In a country like China, or in some of the African countries, but in a country like China that doesn't have a big credit card industry, mobile payment like Alipay and WeChat and so on has leapfrogged the credit card stage, and people have moved from cash to mobile payment, where in countries that have an established legacy of a credit card industry, the marginal benefit is lesser, so they've moved less, and China now becomes an exporter of mobile payment solutions. So I think in the Islamic finance industry, it may well be that countries that are newer to this field may have more capacity, less vested interest in existing structures to innovate and become themselves exporters. So instead of being simple importers of models from outside, innovate, break through into new business models, and potentially become a source of ideas for elsewhere. That would be a hope that can only be placed in the hands of private sector players who are visionary. And often Islamic finance ideas merge in this space with a lot of creativity that is not directly linked to Islamic finance. So one has to have a very broad ability to scan through the business models, through these startups, through this creativity, but bring then into application something that will truly express the basic principles of soundness and fairness that exist in Islamic finance.
Thank you so much, It's quite, let's, I join you with your hope and optimism, and let's see, as you said, you know, Islamic finance catches up with many of these innovations. Now, what we have heard about financial inclusion, we have talked about retail banking, we have talked about consumer banking, but I think we haven't discussed that most of our member countries do need a very large financing for infrastructure building, whereas water supply, sanitation, and bridges and roads and all these things, that's quite a big, large requirement. So there's a big ticket items, and I think the real question is that if I hear the crowdfunding and all these things can work for a small ticket items, but for the big ticket item infrastructure, let me turn to Hazim and ask him that what does he see, what roles fintech can play in mobilizing financing for these large ticket infrastructure projects, which requires heavy financing, long term, lot of risk in it. What can be done?
So I'll try to answer the question, Dr. Zamir, in two parts. First of all, as a financial investment, but second of all, as a social investment. Okay, so first of all, infrastructure investing in today's interest rate environment, and it is looking less and less likely that there are going to be between the ECB and the US, that interest rates will be rising anytime soon. Okay, why is that relevant? We've been in an expansionary economy for a good now 7 to 8 years. All economists will tell you that there is a high probability in the next 18 months of some kind of a down cycle, okay, in some shape or form. What does as an investor, what does a down cycle mean? That down cycle is going to put pressure on your returns, particularly in your alternative asset classes, whether it's private equity or real estate, credit, certainly. A macro slowdown will fundamentally impact your returns. That will bring them down. So let's pause that thought. A lower returns on your alternative investments coupled with a very low interest rate environment. Me as an investor, where am I going to put my money? I want to make some returns, but also I'm a bit nervous about what down cycle is going to hit me. Okay? I can't afford to stay still. Why? Because thanks to all the quantitative easings that the central banks have been putting in the economy in the last 10 years, inflation is coming. Whether we like it or not, inflation is coming. How can I protect my capital against an inflationary environment with a relatively low interest rate? And this is where we see, as an investor, I'm talking now as an investor, this is where we see infrastructure investing play, as an asset class, as an investment asset class, it plays a very fundamental role of generating steady, long-term, 25 years in many instances, returns. Shall we pause until the translator is back? Yeah. So, so infrastructure investing is able, or have historically been able to generate. Hold off. Good to go? Avec plaisir. Ça marche. Okay, so coming back, infrastructure investing have consistently, historically been able to demonstrate the returns between the 7 and 12, 13%. Okay. Now, some would argue, well, geez, 10 to 12%, that's really not exciting. It doesn't have to be exciting as an investor. Okay. On a risk-adjusted basis, these are returns which, in the current environment, the current interest rates, macro environment, are fundamentally very solid. If I can, in the downturns, protect my capital with a 10 to 12% steady return until the macro environment turns, and then I can then switch to the 17, 25% returns. That's terrific. Something we have learned in our 40 years at InvestCorp is the best way to be successful is not to lose money. That's a key thing. If I cannot lose money, that's a great start, okay? And then the return is on top of that. So in a down cycle with a low interest rate environment, it's about where can I protect my capital? And that's where infrastructure investing becomes a big part. So I hope, Dr. Zamir, to answer your question, that as we look in the next 10 to 15 years, there's going to be a significantly larger appetite for infrastructure investing. So now how can we capture it? How can we, as the Islamic world, capture it in MENA, in Africa, and Asia? How can we capture that? A big part of it is attracting foreign capital. Okay, foreign capital, I mean non-Middle Eastern, non-African capital, predominantly in the West, Europe and the US. Why is that? In our professional lifetime, that is where continues to be the largest source of capital. Okay, and we need to be able to attract that capital to our parts of the world. A big part of that is political stability. Political stability usually leads to FX stability. Okay. As an investor, it's great if I'm making 14% on my rupee, but then if I translate it back to US dollars, it's 2%. Then you know what? I'd rather just put it in treasury bills and save me the headache and the flights and da-da-da-da. Okay. So I think, you know, kind of political stability is an absolute foundation, fundamental of providing capital for infrastructure investing. I get so envious. I spend a fair bit of my time in Europe and the US, and I get so envious. You go to these relatively small cities, and they've got the infrastructure, which is 10 times better than anything you see in the MENA region or in Africa or in many parts of Asia. And he says, like, why is it that they can have this fantastic rail system or this fantastic hospital infrastructure, and we lack in our parts of the world? So I think, you know, kind of infrastructure is a fundamental part of any society, not economy, any society for our development, and particularly social infrastructure. We ourselves, we have committed $1 billion for social infrastructure in the Islamic world. Social infrastructure being hospitals, schools, social housing, utilities. And I hope many will do, but this is in part having the capital, in part it's a fundamental big marketing program, which we collectively need to do to attract capital for our part of the world.
Thank you so much. We have few minutes for getting some questions from the audience. Please let me know if there are some questions. Yes, please. Somebody's getting the mic. Kindly introduce yourself, a very brief and very brief question.
Okay, thank you. Please excuse me, I will speak French if you...
So somebody needs to translate.
Mona Al-Benouri, directeur général Banque El Yusri. Alors voilà, moi ce que je retiens de tout cela, c'est que M. Hamour a parlé des coûts, mais les coûts, c'est un impératif. Où on réduit les coûts, il y va de notre pérennité. Le mobile banking est un must-have. Nous ne sommes pas, et puis ce n'est pas une singularité des banques participatives. Nous devons y être. C'est aussi vital que ça. Maintenant, la FinTech, à mon avis, c'est une chance extraordinaire de nous émanciper du modèle des banques conventionnelles et d'être en complète rupture avec ce modèle-là. Parce que nous avons une ambition, en tout cas à Banque El Yusri, ce n'est pas d'être uniquement la banque de ceux qui ont des convictions spécifiques, mais aussi la banque de personnes normales qui n'ont pas d'inconvénient à être dans une banque conventionnelle, mais qui aujourd'hui cherchent à avoir une expérience client unique et à vivre une autre manière, une autre façon de faire la banque. Et donc pour cela, mes attentes il y a un seul défi, c'est un changement de paradigme. Ça doit émaner de nous. C'est à nous d'être prêts et d'être agiles pour changer les choses. Et donc, nous devons être dans une créativité bienveillante, vraiment bienveillante, parce que nous ne sommes plus uniquement le partenaire financier, mais nous sommes à la fois un facilitateur du quotidien, mais surtout un réalisateur de rêves. Voilà. C'est dans tout ça qu'avec la FinTech, si on respecte ces points-là et que la FinTech vient nous donner un coup de main, je crois qu'on aura gagné le pari. Voilà, merci.
I believe it's for addressed to you, Dr. Hamour. Okay, maybe if you can translate the question,
Yeah.
and whoever can.
No, it was
take that
really a
question.
statement of opinion. I think Mrs. Al-Nuiri is the CEO of Bank al-Yusr, and she was really expressing how important she felt that a participation bank in Morocco needs to step up to the fintech challenge. That, of course, cost, costs have to be reduced. Mobile banking has to be taken on, but Mrs. Lebnuri is saying we need to offer new solutions. We need to have new horizons for the generality of the market. So I think, we have encouragement from the Islamic Bank saying we're up to the fintech challenge. I think this is how I read the intervention.
No, that's very good to know. Yes, please. Please, Mike over there. Please introduce yourself and then a quick question.
My name is Dr. Salma Abbasi, CEO of eWorldwide Group. It's actually a question to yourself from the World Bank. I really appreciate what you said, but I want to tie in what the gentleman said from Pakistan. I'm working with a lot of agencies in Africa, and I think that financial inclusion is missing an opportunity for job creation and for financial inclusion for women and the rural communities. If we start thinking that opening a branch is going to be a way for us to reach the people, we're greatly mistaken because we can't afford it. In Nigeria, the central bank has launched a program about a year ago, Anchor's Borrow Scheme, and that's to promote finances to farming. I think Pakistan's trying to do the same thing. However, how do you reach the people who aren't educated, don't understand money? We've created with a private bank, Diamond Bank, so this is practical case study right now, hot off the press, where we've created trusted agents at the grassroots. Kenya, India has done that with self-help groups. Bangladesh has done that. So there's examples for us to see, because this is a challenge across the OIC countries. FinTech can definitely help. And as you said, I'm with you completely. 20-year-olds, 15-year-olds have innovative ideas, especially from the grassroots, because they see the issue. But we need to think differently. I think we need to look at the social aspect and the technology aspect and put them together to actually reach the people, creating jobs, and actually keeping the money for new entrepreneurs to be created in the agric ecosystem, but also through fintech, innovative uses of the applications of blockchain. Obviously, I actually think you need regulation just to protect the poor, because trust is an issue that I think we can't leave to the business people. But thank you very much.
I guess this was also a statement, or do you want to?
Well, it's an important statement, and I think it's a reminder of that piece that we did together, Dr. Zamir, back in 2011 about financial inclusion in OIC countries, if you still remember that piece. At the time, and even now, after the improvement that we have seen in financial access and financial inclusion, if you happen to be a woman living in a village under the age of 25 in an African country, you are very much less likely to get access to any kind of finance, despite all of the advances that we have been seeing. This is based on the latest database that we get on financial inclusion from the bank. There is an index called FinDex that we issue every other year with Gallup and Gates Foundation. The way to do it, perhaps, is everything that we talked about today, is using technologies, outreach. It is not, unfortunately so, as it used to be in the past, when they were measuring financial development by a branch under the nose of the potential saver or investor. With all of these kind of outreach mechanisms through mobile phones and through the internet, we can do a better job. But again, this doesn't mean that we are without access impediments. All of what we talked about in terms of identification, issues related to infrastructure, high-speed internet, issues related to security need to be facilitated. And beyond that all, these kind of mechanisms, and I have seen it with admiration, that some of the solution could come from the South. when we are talking to some G20 countries like Indonesia, we don't refer to an example coming from Europe or from the United States, but we refer to Kenya and the M-Pesa program. But that needs to go beyond the financial transactions and payments. That needs to get into financial services, into savings, into micro takaful or micro insurance, and better access to credit. That requires more investment in the industry itself, and not just to have kind of outreach points here and there. The potential is there. The dividend, the positive one, is upon us, but again, missing the opportunities. Some of our countries, unfortunately, have been very good at missing opportunities rather than gaining them.
Thank you so much. Just one last question, but very quick one, because unfortunately, two of our panelists have to catch flights, and we don't make sure, we don't want to hold them, but please, very quick. Thank you.
Mohamed Lemazoueri, je suis le délégué général de la Fédération nationale des associations de microcrédit au Maroc. J'ai une question pour M. Rietz. D'abord, je tiens à féliciter l'ensemble des panélistes pour la qualité des présentations. Alors, je pars du principe que les FinTech, c'est un levier extraordinaire de développement. C'est un accélérateur des services financiers. Mais je partage avec vous, ceci dit, je partage avec vous quelques déclarations, notamment celle du vice-président de la Réserve fédérale américaine, qui a dit que la prochaine crise financière serait certainement différente de celle qu'on a déjà connue, et les FinTech seront certainement pour quelque chose. La deuxième déclaration concerne le Conseil mondial de la stabilité financière, qui a identifié les risques systémiques liés aux FinTech, notamment tout ce qui est cybercriminalité, tout ce qui est contagion virale des terminaux, des applications et des infrastructures, tout ce qui est blanchiment d'argent et financement du terrorisme. Et donc, il parle d'un risque systémique. Alors, la question que je vous pose, c'est comment mitiger l'ensemble de ces risques, sachant que l'évolution juridique et réglementaire a besoin du temps long, et l'innovation technologique, par contre, ça va à une vitesse extraordinaire. Merci.
So, if somebody can translate.
Yeah, if I can try to summarize it, and I think the question was around, first of all, that all experts expect that any next financial crisis is going to be very different from where it was in 2008. But second of all, the risk that fintech perhaps is maybe unregulated, and how do you mitigate a lot of the risks and a lot of the concerns that fintech may open in terms of deregulation and in terms of the uncontrolled access. If I can start answer, at least give my perspective, is to me the fundamental part of fintech, it has to go hand in hand with blockchain, with one exception. Blockchain today is unregulated. And I think that's what Mr. Mahmoud was referring to, the use of crypto. Usually blockchain is associated with cryptocurrencies. To me, it's an unfair association. Why is that? Blockchain is it's a ledger format of accounting a transaction. Whether you use it for a cryptocurrency or use it for your shipping containers, it doesn't matter, okay? But cryptocurrencies have been one of the very early adopters of blockchain. But let's set that aside. A regulated blockchain, who can regulate it? It needs to be the central banks, it needs to be the World Bank, the IMF needs to play a fundamental role in that. Once that is regulated and there is an ecosystem that is quite articulated, connected, interconnected, financial institutions globally are very used to being interconnected since the 1920s, so this is nothing new, okay? And I think that will hopefully address a lot of the concerns around microfinancing or digital financing being used to either finance terrorism or other forms. But it needs to evolve in a digital platform, and where you're absolutely right, we cannot evolve financing into the digital world without having the oversight coming from the digital world. And that needs to start with the regulators, and a digitally and IT savvy and conscious regulators is probably a big foundation of what needs to start.
Thank you. May I request the panelists very quickly, since we're running out of time, may I ask that you answer the question, but also make your closing remarks about how we can use FinTech for Islamic finance to achieve SDGs. So maybe Dr. Mahyuddin, can you let's start?
Maybe I could start responding to this question quickly. I think there is a little bit of a dilemma here, and we have to be very careful when we discuss some of those issues related to fintech. At present, we don't see risks coming from the fintech side. They are very small at this stage. They are growing rapidly, yes, but they are at this stage are small in terms of their size vis-a-vis the rest of the financial systems. Now, the dilemma here is that you don't want to over-regulate. That will kill innovation. And at the same time, you don't want to leave it completely open. That will increase the risks. So a core message from the Bali FinTech agenda is the need to find a balance. And that balance is very critical and depends on country priorities. There are two extremes. You've seen some extremes where countries that have let go completely and now they're struggling how to catch up with the regulation. And some countries over-regulated, they literally killed the innovation in that jurisdiction. So, and not only that, but things are changing rapidly. A year, not long ago, I mean, less than 2 years ago, everybody thought the new payment system will be blockchain-based. Now, more and more, we realize that, well, maybe blockchain is not suitable for payment systems, for modern payment systems. Maybe the next generation of blockchain could be, but not now. So things could change completely. So if I jumped in a year ago to start regulating the blockchain in the sense of for the payment purposes, I would completely miss the point. So this is the kind of balance, and that's why we're encouraging countries to really develop a national agenda for fintech and to make sure that in that national agenda of the fintech they include all the elements and try to find the priorities and try to balance these priorities. And that's very critical for the development. Otherwise, we miss the opportunities.
Right. Quick three things, very quickly. I go back to the point that I started, that fintech requires RegTech. And it's not just about central bankers and regulators use sophisticated systems and fancy computers, but basically about the training and the advances that they may require in order to modernize their systems of the regulations. We cannot regulate, supervise, monitor 21st century with rules based on 19th century kind of frameworks. The second one, when it comes to the links between fintech and the SDGs, I refer to two quick things. One is the new principles related to impact investing, because there is a great deal of potential there for conventional investors, as well as, and more importantly, in this gathering today, for the Islamic finance investors. Many people are claiming that they are impact investors. This means that they are getting decent returns for the money and having social and developmental impact at the same time. In less than 10 days, actually in less than 8 days, at the bank, at the World Bank, we're going to be issuing, in coordination with many partners, the new 9 principles for impact investing from the very start of the project to the very end of it, with rules of engagement, not to avoid any kind of impact washing, as it happened with greenwashing, as it happened with climate finance washing. We need really to make sure that those who claim that they are doing something, including ourselves, that they stand for it. And finally, on the SDGs and their finances, the bank had been issuing a variety of SDGs equity-linked bonds that could be adjusted to be done in a Sukuk format, linking it to the 17 goals. We have done that with success with BNP Paribas, other banks, smaller transactions of around $150 million, but with multiples of them. So there is a great deal of opportunity. And if you see the filtering of these kinds of funding by the prevention of harm and linking to the good of the SDGs and having a decent benefit, you can see that it's very much compatible with the spirit of Islamic finance, and we need to see more of that going forward. Thank you.
Okay, Dr. Hamour, last but not the least.
Yes, Dr. Zamir, when you introduced me, you mentioned me as a representative of the private sector. So I would like to make a statement relating to the private citizen. And that's also of concern to the general agenda of Islamic finance. Information technology, especially when coupled with artificial intelligence, is giving the state an unprecedented power of monitoring and tracking and potentially acting with respect to the citizen. Now, this power can be used legitimately for policing, for anti-money laundering, for KYC purposes, and so on. But the same tools can be used and are actually being used in some jurisdiction in an authoritarian, coercive manner. There are countries today that have cameras on street corners and use artificial intelligence of face recognition to identify citizens and where they are, or that are forcing people to have apps that help monitor them on their phones and are putting roadblocks to make sure that they have the apps and so on. So there are standards ultimately of privacy protection, of citizen protection, of human rights that need to be developed alongside with this trend of moving our entire financial life into a database that every government is watching and monitoring. And I think there is a responsibility. This is a constitutional legislative issue, a responsibility even of the MDBs to develop these standards in the same way as they develop standards of environment and standards of sustainable development. These are standards that go beyond the executive of one state and try to measure how protective different states are of the privacy of the citizen. I think the EU has been at the forefront of this effort. I think it needs to be emerge, because I think there is a real danger here of something that we spoke very optimistically about in terms of implementing new opportunities in finance could actually turn into a very dark situation.
Well, I think it's very, but I fully agree with you that I think these are the territories which needs to be explored further, and I think that could be a topic of whole one full session. But unfortunately, we overrun the time. I wish we had more time to benefit from the experience and the wisdom of our panelists. But please join me in thanking them for their time and for sharing their views. We're just going to have a quick photo, and then we'll